Good afternoon. This is your midday market update. Well, the volume is fairly light down here on the floor, and you know what? Markets are down, but they're not down a whole heck of a lot. Really, it just is a feeling of blah today, even though there's lots of news going on out there. So, you know what? Tomorrow is May 1st, and there's a lot of talk always in the market about sell in May, go away. So I'm with Keith Bliss from Cuttone, and we're going to talk about that philosophy. Now, is that such a good idea to sell in May and go away? Things get very slow in the summer, and a lot of people check out.
They do, and even in years when you don't have a frothy market like we've been dealing with in 2013, they sell in May and they go away for lots of reasons. Maybe they're going to the beach and they just can't pay attention to the market, but I actually think that'd be a pretty good strategy this year, because your risk of a downside run inside of the equity market, I think, is a lot higher than the risk of you missing something to the upside. We're in uncharted territory again. We almost hit, well, we did hit an all-time high again yesterday, intraday. So where do we go from here? Again, if we stay above the old all-time high, 1597 and change, for a few days, then we will certainly trade higher. That's a very bullish signal. But I'm not sure we're going to get there, and we may trade sideways here. But the sell in May, go away. How much more profit do you really need if you're not managing your money? I think that would be a wise thing to do this year.
We have been getting a lot of economic data, but it's been a little mixed. You know, we've gotten consumer confidence, we've gotten PMI, and it does seem like that the market is looking for more clear direction as to which way the economy is going, and we don't seem to be getting that. We get, you know, one step forward and two step back.
That's precisely the problem over the last year, is the mixed bag of economic data. It's really kind of a muddled recovery, which we know, but it's do you veer left or do you veer right? The professional money manager is sitting out there. This is probably the toughest week out of the year that they have to cope with, because we're still in the height of earnings season, so they're digesting all that. Over 900 companies are reporting this week, and we get all this economic data that's coming at us. We had the advanced first quarter GDP, we've got the jobs numbers coming at us Friday, as well as a bunch of other things around the manufacturing sector. That's why you're seeing complacency in the market and almost apathy in the market today. People just can't cope with it. So they will get some direction hopefully by the end of the week and then start making some moves. But again, if they're willing to take profits at these levels, and why wouldn't you? If you were tracking closely to the S&P 500, you're up 25% since the beginning of 2012, then we may see a very dull and very slow and very apathetic summer this year.
All right, well, it sounds like Keith has got to get back to his desk because he's got his finger ready to push that sell button. That's Keith Bliss from Cuttone, and I'm Deborah Borchardt with The Street.